Hello, and welcome to Frontline Forecasts. This is my end of 2012 forecast and a sneak preview of what's going to happen in 2013 and then beyond. So, in a phrase, the U.S. economy remains with stubborn, anemic growth. That's been the situation we've been in over the past year, and that's going to continue into 2013. We have lots of headwinds out there, and those headwinds are going to continue to blow, both domestic and global, over the next year, and thus we're going to continue to experience what we've got now. So you're going to have to learn how to thrive in an anemic economy for another year. So let's quickly just take a look at what the breaks or the headwinds are on the economy. The European Union is in recession. That's the second largest economic bloc in the world when you add all those countries together. They have a huge debt crisis, and yet they have many players that have to come to the table and reach consensus for them to get out of it. It's going slow, but it is moving slowly in the right direction. The faster they get it under control, the better for everyone, not just them, but for the rest of us. And that's likely to sort out within the next year, and slowly they'll get back on track. But don't look for them being a big driver on the economy for another year and perhaps a year after that. China has slowed down. They'll come in at about 7.5%, which is way down from what we're used to and like to have, which is 9 or 10%. The government has put in a huge stimulus package. That's doing some good. But they're down low. Likely they'll go back up somewhere closer to 8 in 2013, which will be somewhat better news, but don't look for them to go back up to 9 or 10%. And remember that they've considered to have an incredibly robust export part of their economy. They are way up around $350 billion, which is down from where they were before, but that's still huge. And for the U.S., it's been a really critical partner for us, as exports have been a major driver for the U.S. economy over the past couple of years. And our export business with China has been almost 7% year-end over year. And they're just a tremendous, important trading partner for us, regardless of all the ups and downs and good and bad things about that. In addition, the U.S. political economy, which we're all tired of having and talking about, but it still remains pretty dysfunctional, which has kept a lid on economic growth. It could be much more robust had we had a better political situation where congressmen were actually working together to find solutions and not just sort of honed their competitive advantages and getting us nowhere. And last but not least, we've got persistent high unemployment. Now, the good news is that unemployment has come down significantly in the past couple of years and has come down significantly this year. The private sector has been creating jobs at a consistent pace over the past couple of years, just created 171,000 jobs. The government, local, state, national, have been shedding jobs, which has been a break on economic growth, probably shaving around 1% off GDP. And at 2% growth, we're creating about the number of jobs you would think we would create. So until the conditions get better, both internal and external, we're likely to have around 2%, 2.3, 2.4% growth over the next year. So we're going to continue to slowly create jobs. But there's no reason to think we won't, and there's no reason to feel this won't slowly get better. A slow economy puts us at risk, but we do have some positive signs that are going on. So the forecast really is cautious optimism and anemic slow growth in 2013. Somewhat better than 2012, maybe a 0.5 percentage point more in GDP, but continuing to move forward. The signs for optimism are that our exports are at record highs. We are at 180 billion, and that's just an incredible number of exports. Business is sitting on a huge amount of cash. They are ready, able, just not willing to invest some of that money. The political economy has placed a big lid on it. Some of the uncertainties and challenges of the global economy about where to risk and do business has kept a lid on things. Once we elect a new president, whoever that may be, I think things will get better. So look for business to pick up as we get past the election and into 2013. Housing is coming back. In fact, it's coming back momentarily, at least, a little bit stronger than people thought. We're likely to have 1 million new housing starts in 2013. And from being a drag for the past 4 years, as we hit and move into 2014, it becomes a much more robust driver and likely will put a full percentage point on GDP when we get to 2014. And last but not least, consumer confidence is up. Consumers have deleveraged enough with their debt that they're not holding back all spending. Consumer confidence is the highest it's been in 5 years, and that should continue. So there's lots of reasons for optimism. They're weak. They're not as strong as we would like them. But overall, I think we should leverage off the good news and think about what is the best thing to do if you're a company. Now, if you're a company, yes, you're going to have to thrive in this for another year. But don't just survive, thrive. There's no reason not to be aggressive in building market share, in making investments, particularly as we look out beyond 2013, the end of 2014, and 2015 to 2020, we're going to be back to much higher growth, much lower unemployment, a much better global economy. It's going to most likely, the most likely forecast is it's going to be a great time for growth, a great time for profits, a great time to be in business and be successful at a really good, no more anemic kind of growth. So you want to get yourself positioned now. You can't position yourself in a nanosecond. So you want to make those A-player hires. You want to really think like your customer and think like your customer is going to be thinking 1, 2, 3 years from now. So you really build the kind of competitive advantage that is going to increase your market share and open some new markets. This is the moment of opportunity to do that. So leverage the slow, anemic growth to your advantage to not only be profitable over the next year or two, but also to set yourself up for really good profits when we get past this. One word of caution is, depending on how we play this fiscal cliff, or if something goes off kilter in the European Union, if we become too austere or if we overspend, we could drive a recession. So it's possible there could be a short, more cyclical type recession at the end of 2013, 2014. But if our political economy can get itself on track, if we don't have any, ratcheting up of the global headwinds in the EU and in China, we likely can avoid that. So the forecast says it's time for the smart CEO and the smart business to be aggressive, leverage the situation, and get yourself well positioned for the wild ride beyond 2014.